If you had 100 grand to invest today, how would you do it? Would you invest it in real estate, stocks, crypto, bonds, maybe some combination of all of those things? It's not really an easy question to answer right now, especially in this economy and investing climate. But it is an important question to answer because we need to be thinking about how to best allocate our resources even during these difficult times. And I know 100 grand is a very big number. Not everyone has that. Most people don't have that number to invest. It took me years of investing and saving to have this amount of money to make decisions with. But I wanted to try out this new format where I talk about how I would personally allocate resources in a given situation. And if you guys like this type of format, I'll do other amounts like 100 grand or 50 grand or 5 grand in the future. So let me know in the comments after watching this video if you like this type of format. So the reason I chose 100 grand is because I actually got this question on Instagram the other day, and I had actually recently completed a real estate deal that basically answers the question exactly. Like the numbers were almost the same. They asked about 100 grand. I'd invested almost 100 grand into this deal. So I'm actually just going to share with you the specifics of the deal and why I made the decisions that I did. So even if you don't have this amount to invest, or maybe you have more than this to invest, I think that you're going to learn a lot from this video regardless, because it shows how I'm thinking about capital and resource allocation, and it can hopefully help you do the same. So let's jump in. As with any resource allocation decision, you got to start with your goals. And I should probably just clarify what I mean by resource allocation. Basically, it's just how you are choosing to spend your time, your money, your skill set towards your financial goals. And that's why every investor needs to start here, is like, what are you actually trying to accomplish? Because what deals you do and how you allocate capital and money is all about starting with the end in mind. And for me, that mostly means rental property investing these days. I do some syndications, investing in multifamily to take sort of bigger swings and take advantage of other people's skills that I don't have in adding value in big renovations. I do some private lending too, but for the most part, I invest in rental properties, mostly right now in small multifamily properties in the Great Lakes region. And the reason I mostly buy rentals these days is because my goal is to retire probably 10 to 15 years from now. So I look for deals that have really good properties, ones that are going to last a long time with relatively low maintenance. They got to be in a good neighborhood, and they have to at least produce break-even cash flow or better, with a good chance of that cash flow improving, because what I really want is cash flow 10 years or 15 years from now, because frankly, right now I live off of my income. I work full time. When I'm thinking about how I'm going to spend or invest 100 grand, my mind immediately goes to rentals. And this is literally just what I did earlier this year. So I'll show you this specific deal. It was listed, it's a duplex. It was listed at $215,000, which honestly, I don't know what the listing agent was thinking here, because I started looking at comps for this property, and the closest comp that I could find, this is true, is one block away, another duplex in maybe a little bit better condition, but it was a pretty good comp for $310,000. So this was listed at nearly 100 grand less than the closest comp. My agent was like, there's no way, and this is in 2024, it's like, there's no way this is going for 215. We got a bid over asking. And I know a lot of people don't want to do that anymore, but it was clear to me that there was so much equity in this deal, even at a higher price, that it was worth bidding on. So I wound up bidding at $250,000, so 35 over asking. And I did an escalation clause up to 255. And I wound up getting it under contract at $252. Now, the reason I was willing to spend higher and I was attracted to this deal in the first place is, one, that it was an A-plus neighborhood. It's really one of the finest neighborhoods in the city. It was fully rented at $2,400 a month. So it wasn't quite the 1% rule, but even on market, even paying over asking price, the rent to price ratio, which is just a good proxy for cash flow, was 0.95%. So that was really good. And the last thing that really sold me on this deal is the zoning. So it's on a really big lot, and it's zoned for up to 8 units. And I don't have any immediate plans to redevelop this, but I love that potential in the future. If I wanted to build a bigger multifamily property, I could easily do that. And again, it's in an A-plus neighborhood, so that could be really, really profitable. So all in all, when I acquired this property, I put 25% down. That comes out to $63,000 for a down payment. Closing costs, I'm going to use round numbers here, guys, but closing costs were roughly $5,000, and I put aside another $5,000 into cash reserves just in case anything went wrong for the property. Now, right when I bought it, I actually had to put $4,000 in just for some safety repairs that came up during the inspection process. And just so you know, I did a pass-fail inspection. So I basically said, I'm not going to nickel and dime you for particular things. I'll just tell you if I want the property or not after the inspection. And that was to get that property at 252. I should mention that I did not have the highest offer at 252, but because of some of these terms like the pass-fail inspection, I was able to get it. So when you add up all those things, the $63,000 for the down payment, $5,000 for closing cost, $5,000 for cash reserves, and the $4,000 for some of the safety and basic maintenance repairs that I needed to make, that came out to $77,000 of the $100,000 budget that we're talking about in this video. And at the close, this is sort of what the deal looked like for me and what my returns rate. Guys, I put in all of my expenses. I am a very conservative in my underwriting. I make sure to spell out everything that possibly could go wrong and budget for it. None of that Instagram investor nonsense where all they have is their mortgage payment and they deduct that from rent and call that cash flow. That is not cash flow. You have to start with your rents, which again were $2,400. Then you have your debt service, which are principal and interest. You also want to take your taxes and insurance. For me, my debt service was $1,220 per month. Taxes were $200 and insurance was $110 per month. Then I set aside $300 per month for maintenance and CapEx. I put aside some money for eventual turnovers. I set aside 6% of my revenue for vacancy and 8% for property management because that's what I pay. I'm an out-of-state investor on this deal. And when you put all those things together, even though this was close to a 1% rule deal, I like to be very conservative with all those expenses. And that came out to a cash-on-cash return of 2%. And so that's actually, I think, in this day and age, not that bad, right? Because we're breaking even. This was an on MLS deal and I paid over asking price. And remember what my strategy is here is that I'm trying to buy for the long term. And so my number one criteria is it's got to be in a great neighborhood, it's got to be a good quality property, and it has to at least be break even. So when I ran all my numbers, I hit all three of those things. So I was excited about this deal. But you're probably wondering, why on earth would you do this deal just for a cash on cash return for 2% when after all, you put your money in a high yield savings account right now, you're getting 4, 5%. Because average stock returns are 8 or 9%. So why would I do this? Why would I run a real estate business for just a 2% cash on cash return? Well, I'll tell you a couple things. First and foremost, I look at a total return. So cash on cash and cash flow is just one part of it, but I also have to take in potential appreciation, the loan pay down, and tax benefits. And when I add all of those things together using my total return method that I've talked about in other videos where that's what I really care about, my return, even with just a 2% cash flow, is about 12% for year one. So that is well better than stock market averages, which is pretty solid. But the real reason I did this deal hasn't even come to fruition yet. Because remember, I've only spent $77,000 of my $23,000 budget for this deal. And using and applying that other $23,000 is where this deal goes from being solid to being what I think is really strong. I waited 2 months until two of the tenants, they wanted to move out. They chose to move out. During those 2 months, again, I was still breaking even. I was making a little bit of profit. But once they moved out, I decided to do a renovation of the unit. It didn't need a ton of work, and I knew that ahead of buying it. But I invested about $12,000 into the unit, and I'll just show you guys what I spent on everything. So here's the exact scope of work. I installed new doors. This was key because the current tenants, it is technically and legally a 2-bedroom, but there was like this weird barn door kind of situation where it felt like it was 1 bedroom and there was only just a couple living in there. But I turned it into a proper 2-bedroom by fixing that door situation. I renovated the bathroom. I put in new floors. I put in paint everywhere. And I didn't totally replace the kitchen, but I put in new paint. I put in a few new appliances. I spruced it up. And what this did was brought this unit from $1,150 a month in rent to $1,450 a month. So on a 12% investment, that gets me a $3,600 return in just the first year. That's a 30% ROI in year on that investment. Of course, I have to deduct some of the vacancies, but I'm just trying to simplify you to show you why I would spend 12 grand on this much. And so after this was done, and I have released it now, actually, I thought it was going to be $14.50 was what I was going to get. It was actually $14.95. So it did a little bit better than that. I found great tenants, and it brought my cash on cash return up to about 5.75%. I'm doing better than bonds. I'm doing better than a high yield savings account. I'm doing better than dividend stocks at close to 6% cash on cash return. And now I have a recently renovated unit in an A+ neighborhood. Really, really good. So now my total projected return when I factor in everything went from about 12% to closer to 15%, which is really good. We're talking about almost doubling the average of the stock market. And on top of all that, in addition to just getting a better cash on cash return, my after repair value, so my property was worth about $252. I think it's actually worth closer to $300,000 now, which if you remember from the beginning of the video was the closest comp I could find. So I actually think we're sitting really, really pretty after just doing that one renovation. But if you're keeping tallies here, I had 77 grand. Now I'm up to 89 grand. I still have 11 grand to go, and I still have one unit to go. So I haven't done this yet because my tenants are moving out towards the end of the year. So like in a month or two, I'm going to do basically the same thing I did with that first unit with the second unit. Second unit's actually in better shape. It's commanding higher rent already. My estimate is that I'm going to need to spend around 6 grand to spruce this one up, and it should bring rents up another $200 pretty conservatively. So that's going to get me close to a 7.5 or 8% cash on cash return, which personally I am very happy with. In this day and age, if you can get an 8% cash on cash return in an A+ neighborhood and you're increasing the value of that property, I love it. And I came in and investing about $95,000 instead of investing $100,000. So I came in a little bit under budget. But for me, that you ask what I would do with 100 grand, that's exactly what I am going to do with 95 grand with an on-market deal here in 2024. Just as a recap, I would do this deal all day because number one, these are minor cosmetic style rehabs that are great. I'm not doing anything structural. I'm not moving walls. I'm not changing layouts. I'm making units nicer in managed scope that can usually be done in 3 to 4 weeks. So there's not a lot of vacancy. The other reason I love this deal is because it broke even right away, which reduced my risk. And, no one's getting out of bed. No one's getting super excited about a 2% cash on cash return. But if you can get that 2% cash on cash return, and you know that once you complete your renovations, you're closer to 8, 9, 10%, that reduces your risk because you're still making money and you have a solid investment that's at least as good as the stock market or better. And there's upside. That's why I really like it. Now I'm at a good cash on cash return with about 7.5%. So I really like that, like this deal. I think that rents are going to grow because I'm in an A+ neighborhood, and my total return should be somewhere between 12 or 15% depending on appreciation, but I'm not counting on appreciation. Even without appreciation, I'm going to be doing well better than other places that I can put my $100,000. And then lastly, this is sort of hard to quantify, but I just love the long-term upside due to the location, lot size, and zoning. And so that's why I pulled the trigger on this deal. So again, these are the kinds of deals I like for my portfolio. It's going to get me some cash flow now, but that's not what I'm in it for. I'm basically getting paid 7, 8% to hold on to a valuable asset in a growing market that is going to help fuel my retirement 10 or 15 years down the road. And I know that some people see a 7.5% cash on cash return as low. I sure don't. It's better than you can do with your money anywhere else right now. And that's when I was talking earlier about resource allocation. It really all comes down to this, right? Like, where else are you going to put your money where you can get cash flow of 7.5%? Because I'm not seeing anywhere. And on top of that, you get all those other benefits of real estate. So I think, to me, this is a no-brainer how I would spend $100,000. But I'm sure everyone watching this has a different opinion on how you would spend $100,000. So let me know in the comments below if you agree. And don't forget, let me know if you like these types of videos, because I'll do other amounts, I'll do other scenarios, and talk about how you might want to allocate resources in a different type of situation. Thank you all so much for watching. For BiggerPockets, I'm Dave Meyer. See you next time.